Hey everyone, David here with Winning Options Trading. Just a quick recap on today's market action. So this is what we were posting over the past several days. 2 days ago, on Tuesday, we had the first day of a pullback after a large move up. We have a 3-day pullback. Typically, in a bull market, we look for a 2 to 5 day pullback, and then we look for a setup opportunity. So the S&P 500 index is set up. That's a bull flag setup. The low of today's candle is higher than the previous low candle on September 17th of 65.51. Today's low was 65.69, and we can see it closed way above that low. So that's a strong candle. Doesn't mean it might not pull back tomorrow, but this is an indication that this would be something we could trade now. So we would trade, if we want to trade the S&P 500 market, we would make a trade on the SPY, Exchange Traded Fund. That's a closed-end mutual fund. ETFs trade just like stocks. And so you could buy the stock, but typically what I would do is buy an option contract and then set a target. I would get in, first of all, above today's high of if it was on the index, above 66.19, and then I would put a stop below today's low of 65.69. So anytime we place a trade, we place a trade above the high of the low day. We place our stop below the low of the bounce day, like today, and then we place a conditional order if we get in, only if it goes above today's high by a certain amount. It's our filter. So anyways, that's a bull flag setup, and then from there we would trade that up to the high or the breakout target above that. But if we kind of scope out on this, we can see that this actually already hit it hit a major target. It's not not working for me here, but anyways, we'll move on here. The Nasdaq 2000 bull flag setup, and that's even a little more bullish because it's a green candle. That means that it closed higher than where it opened today. And so again, that's a bull flag setup. We can see here, this is a perfect example. When it broke out at this level, you see this measurement I had done from the high over here of August 12th down to the low over here. That gave us a breakout target of the breakout. That's the distance from the breakout area to the low of the pullback. We added to the breakout, and we can see right here it hit that. So it broke out, and then it went up for 3 days, and then it pulled back for 2 days and gave us a bull flag setup, gapped up the next day. So 70% of the breakouts do come back and give us another opportunity, but in this case, it wouldn't have been a great opportunity because it gapped up. So the best trade on that one would have been the breakout. But in any event, we have another setup, and so we'll look at this, the ETF on this as well. The Nasdaq 100, on the other hand, we're at support lows. We're at a 3-month low. If we look at the close here back on July 14th, it closed at 89.66. Today's close was 86.72, so that's a 3-month downtrend. Not too excited about that. The Russell 2000 bull flag setup. We see that we made a new high close here back on September 18th at 24.6770. Went sideways or started to pull back one day, then it bounced the next day, tried to break out again, pulled back for 3 days, and now it's a bull flag setup. So this time, if it goes above, if we were trading the index, if it went above 24.18 by a certain amount, then we would get in, and our stop again would be below the low of today's candle. And then the Dow, also a bull flag setup, we can see. And then volatility, relatively low, 16.74. It was up, but we can see the long upper shadow means that it rejected the higher levels of volatility. So we might now see a pullback. If we do, that's, obviously there's an inverse relationship. As volatility goes up, the markets come down. As the markets go up, volatility comes down. So in any event, this is an extremely low range of volatility that we're in right now. The 14 area up to the 16 or 17 area, that's an extremely tight range, and it's also very low. That's why we're seeing new records or new levels, in the indexes. So to summarize it, We have some bull flag setups on the indexes. Now we'll take a look at the sectors. Healthcare, not too exciting on the 3-month trend. Today it closed lower than where it was 3 months ago, so it's now technically a 3-month downtrend. Not too excited about that. This one, obviously, Staples, also a 3-month downtrend. Financial, strong. That's a bull flag setup. It made a new high close here on September 18th. Went sideways 2 days, pulled back. So that's basically a 2 to 5 day pullback. That's what we look for. So if it goes above today's high of 53.71, we could get in and we would trade it to some higher target. But, I'm not sure I'm not too excited about it. There's still some resistance. It's failed to break through on volume. And so we'll see. Energy, that's a new breakout today, a breakout of this high that we had back in early September. So that's a breakout setup. It would be a late entry right now. It might not be too late, but 70% of the breakouts come back and test the breakout area. So typically what I would do on this is wait for a higher high and a higher low, and then get on our bull flag trading plan. We have 7 different trading plans. Technology, nice bull flag setup, super strong sector. Basic materials, 3-month downtrend, not too exciting. Communications been one of our strongest sectors, still is. That's a nice bull flag setup, so that's something we could place an order on. XLI, that's on closed here back on July 14th at 151.01. Today it closed at 151.24, so up 23 cents over 3 months. So that's basically sideways, not too exciting. Real estate, same situation. That's actually on a downtrend as of today now, 3-month downtrend. Utilities, pulling back. I don't trade utilities too much. They're based on, as financials go and interest rates go, utilities go because, they're interest rate sensitive. So the higher the interest rates, the better utilities will do. And then consumer discretionary. When the economy is good, people spend money. And so these are discretionary type goods. And, that's a bull flag setup. It's a 1, 2, 3, 4, 5, 6, 7, 8 day pullback. A little more than the 2 to 5 days, but still it is a setup. But I don't like the candle as much as I like some others, but it is as potential support at the 50-day moving average, as we can see there. So, anyways, the overall trend, as we can tell, is up. If we look at the dollar, that's starting to move higher, so there's some strength in the dollar. And in fact, that's approaching a potential breakout of 26.62. And so that's something to keep an eye on. Crude light, overall, it's on a 3-month slight uptrend. We see the close here back in July 14th was 64.10. Today's close was 64.98, so slightly up. If it breaks out of the high from here of 65.43, then we definitely are back on track towards hitting these targets up there at 68.50 area. So crude light could be a good setup coming. For myself, I would look at this on a weekly candle and then take a look at it from that. Gold, bull flag setup. There's an opportunity there to place a conditional order. It's gone sky high, but, obviously money's coming in there. I mean, the foreign central banks are buying it up, and that's why it's going up so rapidly. Silver, we missed out on some great opportunities back here. I was telling a good friend of mine when it was at 40 just several weeks back. We didn't get our accounts funded in time, and it's gone from 40 up to 45. That's a 12% move. And so it was a bull flag set up today, but it already got filled. So there's going to be some opportunities coming, but it's moving up towards that all-time high of 50, which once it gets there, it could just break out, but likely it'll test. Or if it does break out, 70% of the time it comes back. So there's going to be an opportunity there, but right now it would be chasing it. Natural gas in a long-term downtrend until we see a reversal, not too exciting. And then these are interest rates, so we're going to skip by that. Go to the Magnificent Seven. These are the 7 largest Nasdaq 100 stocks. We'll start with Apple. As we can see, it blew right through this breakout area, did not pull back and test. It went right to the breakout target and then tested 2 days and now closed higher today. So, that's a setup where we're going to go higher. And, Again, for me, that's kind of chasing it, but we have some 264 target coming up. That's 8 points from where it's at. Next target up there, a couple others, 285, 290. So there's still a lot of room on this, but I'm not sure I would make a trade on it myself right now. Microsoft, that's on a 3 month. It closed 3 months ago at 510.88. Today it closed at 507.03. So technically it's down on the 3 months. However, on the last 1 month, or since September 5th, last 3 weeks, it's on an uptrend. But again, I'm not too excited about it. Nvidia, that's beautiful. That's a new high close on September 22nd. 3 days ago, 2-day pullback today gives us a bullish bull flag entry. So you would enter or place a conditional order to get in above 179.78. And then you would trade higher. There is a lot of resistance up here, though, in the 183 area. So I'm not sure I would trade it right now, but you could. Meta, not too excited about that. The high close over here back in August was 790, and then it failed to close higher here recently. So, it's a sideways trend at best. And as we can see, it's under the 30-day moving average. So Amazon, that's now on a 3-month downtrend. Nothing too exciting there. Google, beautiful bull flag setup. We have a higher low right here on this candle. It's a bullish candle. We just made a high close on September 19th. So definitely that's an opportunity. The last high was 256.70. The entry here would be 247.75 area. So there's a target there to the swing target of about 9 points or so. And then from there you could trade higher. But so that's an opportunity. Tesla, made a high yesterday, pulled back today. It's not a setup today, really. That's not bullish, a very bullish candle. Technically, you could put an entry to get in above 435.29, but you have resistance right there of 444. I'd like to see this pull back about 2-3 days and give us an area to get in, maybe around 400 area or 410, just to give us a little more room to get up to that 445. But that's where that's at. Technically, it's a setup. And then commodities, we already looked at silver, gold, oil. So really, that's kind of our daily wrap up. And then the ETFs, like we talked about, the SPY is the way to trade the S&P 500 index. That's a bull flag setup. EEM, that's emerging markets, technically a bull flag setup, but you can see this has a lot of gap ups and gap downs. So, that's something that if I was to trade it, I might trade it intraday and get out before the end of the day, just to avoid a potential big loss on the downside. You can certainly benefit on the upside, and it probably all averages out, but it's a little more tough with those gaps. Diamonds, that's the ETF on the Dow Jones. IWM, the ETF on the Russell 2000. GLD, ETF on gold. SLV, ETF on silver. Volatility, FXI, that's the, you see a lot of gaps on this as well. This is the ETF for China. Oil, again, we looked at that on the other chart. This would be an ETF that you could trade. It's a little more volatile, a little more leverage than the regular oil right here, the USO. And the USO technically has broken out of this horizontal resistance. And so you could trade that from 77 up to the last highs at 81. That's a 4-point move. But again, I'm not too excited about it. I think there's better opportunities, but there's going to be some opportunities probably coming up on this. So that's a daily market recap. We'll post a PDF report no later than first thing tomorrow morning. We're working on our offering, so we're going to have a PhD level investor education opportunity. I paid $30,000, $35,000 or so for my investor education. It was worth every penny. I learned a lot. As a financial consultant at Smith Barney and Prudential Securities, I really learned very little. I just had a license to sell a product. So I had to pay a lot of money for this investor education. But, if you follow the rules and you have trading plans and you use money management techniques and you just follow what the charts show, not what people say, you'll be successful. But you have to have written rules. You have to follow those rules on every trade. You have to manage your money properly. You have to have stops in place on every trade when you place the order. You have to have targets in place. You have to have a system for taking profits as it moves towards your target. If it goes the opposite direction of what the chart indicates, then you get out with a small loss. And so those are all the things we're going to teach. The good news is you're not going to have to pay 25, 30, 35,000 like I did. You're going to get that for a fraction of the cost, and you're going to get something that truly is going to give you an opportunity, if you follow the rules and you follow the teachings, to significantly increase your returns. Whether you invest in stocks, options, forex, futures, or crypto, you can use technical analysis to determine what the institutions are doing, because really we just follow what the big money does. The charts tell us that. We don't need to listen to the news. We don't need to listen to anyone on TV telling us what to do. We just need to look at the charts. We can take information we get from outside sources and compare it to what the charts show, but the bottom line is the charts are what tell us everything we need to know. Technical analysis is based on three tenets. Number one, prices move in trends. Number two, market action discounts everything. And number three, history tends to repeat itself. So, the charts don't lie. Okay, they don't lie. People on the news, they don't intend to lie, but they oftentimes don't know what they're talking about. So, if you want to be successful at anything, I tell people, success leaves clues. So, I have several mentors in the business. The number one mentor is Tom Sosnoff of Tastytrade. He knows the money business like no one else. And, so it's a blessing for me to be able to work with Tastytrade and Tasty Live. In fact, if you have an interest in, meeting Tom Sosnoff and his team, there's several events going on this year. You can reach out to me and I'll share the details. And again, the offer for this service will be out soon. It's not out yet. I'm still working on it, but we're hoping to have it ready by Monday. It's going to be live training during market hours, and you're going to see exactly what you can use to perhaps improve on your returns and learn how to trade and learn how to do it the right way. And so. With that said, we're not an investment advisory firm. We don't give investment advice. We just show scenarios and, teach people how they can use technical analysis. We do use fundamental as well. We have access to some, institutional level fundamental and quantitative analysis. So we do factor that in. But really, we look at the overall trend of the market, number one. And if it's up, then we look for securities trending up. And so, you can apply technical analysis to any time frame. It could be intraday. You can be a swing trader where you're trading for 2 days up to 20 days. You can be intermediate term trader, one month up to 12 months, or you can be a long-term 12 months or more. So, in addition, we're going to put together a service where we're going to help people protect their assets before major market crashes. Wall Street will tell you to keep your money in. It's all good as long as you're diversified and using asset allocations. Your money will come back eventually, but honestly, that's not the best way to handle it. I mean, personally, if I have $1 million in the market, I'd rather use strategies to protect myself on the downside and have derivatives in place so that if the market does go down, I make money on those. That compensates for the loss on my portfolio. And on $1 million, if I can lose 200,000 instead of 50%, then I have 800,000 when it hits the bottom. When it gets back to break even for most people, I may have 1.6 million instead of 1 million. And so that's a no-brainer. That's how smart money operates. And so I think we need to follow the people who know what they're doing. And if we do that, we're going to be more successful. All right. So thanks for listening. Hope you enjoy this. We'll talk soon. God bless.